of course, some other guests are also joining us. Ashish Anand, oh yes, Ashish Anand is also here with us. But a quick view, Nooresh, what are your thoughts on the way we have taken out 19,500? If the closing comes above 19,500 today, closer to 19,600, will it be taken as a good sign for the rest of the series?
So overall, the signs are pretty good across the board. If you look at all the other indices, if you look at the Nifty 500, we hit a new all-time high yesterday as well as today. The Nifty 50 equal weight, we hit a new all-time high. The Nifty total market cap, an all-time high. So the only one lagging is Nifty 50, and that is purely because 3 to 4 names in the Nifty continue to be laggards. HDFC Bank has gone nowhere, continues to be drifting lower. Then you have Reliance Industries closer to 2400, 2420, staying at the same place. Then you have Kotak Mahindra Bank going nowhere. And in between, even an ITC or a TCS, Infosys were also struggling. We've seen some bit of a recovery in the IT pack. So if you look at the weights of these top names, HDFC Bank is closer to 13-14%, Reliance is 10%, you have 3-4% of Kotak. So 30-40% of the index clearly does not have a strong trend. So once we start seeing the trend, we could be breaking about 19,600. So that's the view we go with. Till the time we don't break 19,300, the chances of an upside breakout continue to be strong. And watching out for Reliance Industries, first day where it has started showing some strength. So if it starts sustaining about 2450, that could be interesting. So overall, the bias is positive, waiting for heavyweights to give a confirmation.
Well, yes, that wait for the heavyweights to get confirmation just continues because other than maybe pharma and real estate, not much is happening in the trading session today. But Kunal, your view on the market right now?
Well, so I would expect this trend to continue, even though the large caps are missing in action, but the mid caps and small caps are trying to fill up this vacuum of sorts in terms of performance from large cap names. It's very difficult to anticipate that when would this top out, because even a jump, for example, in technical terms from an 80 RSI to an 85 RSI could lead to a significant jump in stock prices, and we've seen that happening across the board for many of the stocks, even though they've reached some sort of or slight overbought territories for themselves. So it's best to have a trailing stop loss into these stocks and keep on riding the trend on the upside.
Okay, so that's the kind of take coming. But Kunal, the question is it getting very, very frothy or toppish in the mid caps? Would you probably look at taking some profits off the table?
So yeah, it depends. I think if you've made 50% to 80% of profits in many of the stocks in railways, defense, and such other spaces, then I think it makes sense to book out at least 50% of the profits, because you know that these kind of rallies, they would not sustain for a long period of time. And whenever these stocks go into a correction, say now in the next couple of days or in the next couple of weeks, you would probably expect that these stocks would go into a healthy correction of at least 15 to 20%. So it makes a lot of sense to book out 50% profits here.
All right, let's go across to the Global FinTech Fest, which is happening right now, and check out the commentary coming in from Madhi Puri-Bhuchar, regulator.
Would act automatically be of a lower level. So this move of risk-based supervision to risk-based regulation to segmented regulation to now very granular level regulation is something which we see that artificial intelligence will have the potential to give us that ability to do that, and therefore make life a lot easier for all regulated entities. But even more importantly, I think that the biggest opportunity that fintechs today have in the markets is that over the years, the regulator has focused on, and that has been its principal mode of regulation, is disclosure-based regulation. And we know that internally within SEBI, we were at times questioning ourselves that have we made disclosure reach a level where it has become information overload? Has it reached a level where people now actually cannot make out what they are supposed to make out of the disclosure? This was a thought that was worrying us. But now, as we see the way that artificial intelligence is evolving, we believe that whether it is in the space of disclosures made by listed companies or by mutual funds or by PMS managers or investment managers, anybody in our domain, those disclosures, if artificial intelligence is applied on them, this can become the tool for giving very, very high quality input and advice to possibly every citizen of the country at a very, very granular level. This is the potential that we believe that artificial intelligence and fintechs can leverage. Today, we have at SEBI already declared that data in the markets is a public good. It is infrastructure. It will be owned by the citizens of the country. So every piece of data that is mandated for disclosure by the regulator is available free of cost, conveniently downloadable with archives, and that is the mandate. And
okay, so those are the commentary coming in from the SEBI chairperson talking about how the regulation has been made very transparent and how overall regulators are working for the betterment of the investors as well. But Ashi Anand is also with us. So Ashi, let me take a view from you as well on the markets. Do you think a lot of spaces are now getting overbought, overvalued, and one needs to be very, very, have a lot of caution now in making fresh investments into any of those verticals?
I would quite think so. As in, if you're just looking, especially in the small and the mid-cap space, right? You've seen very sharp run-ups. Especially in anything related to capital goods, defense, railways. Some of these have started becoming extremely expensive. I think we're starting to really counter in a lot of the optimism around some of these themes. Some of these actual implementation and actual growth around capital goods will take some more time. But you're actually factoring in all of this positivity upfront. And you're seeing this in this space, but you're seeing this across the range. We are especially more concerned around mid and small caps as compared to the large cap space. We're clearly seeing greater value and greater comfort in large caps. So that's broadly the way we're seeing the market.
Ashi, I want to talk to you about the signs which you look for. Is it valuations alone? Is it the way some of the micro cap IPOs in the SME side getting a 6, 7, 10, 20 crore IPO getting a 10,000 crore subscription interest? What are those signs beyond valuations alone which you look at, which have historically helped you, spot the tops in micro caps or small cap, mid cap area of the market?
So there's clear evidence, right? So what you indicated, a lot of froth around IPO market, that clearly is an area of concern. You can also see this around certain themes which are kind of more popular. So you start seeing valuations start to have a disconnect with underlying fundamentals, starting to really factor in a lot of the growth, and you start seeing valuations of companies without very strong cash flows, without healthy ROEs, balance sheets not as great, kind of starting to command 50, 60, 70 P upwards. So you start to kind of very clearly see signs of froth being built up in certain areas. And that is one clear indication. You can also see this in terms of the way small caps and mid caps have outperformed large caps. And the third key indication, everyone in the market knows some of the names which are the higher quality names and some of the weaker businesses. As you start getting closer towards market peaks, especially in certain pockets of the market, you start to see some of the lower quality names actually start to move up quite a lot. And you have clearly been seeing signs of this over the last month.
Point taken. So that's the kind of verdict coming in on the market moves right now. But just wanted to address some of the stocks and news. And of course, there were large deals that happened on Nykaa, IRFC and BKG. In fact, Nykaa is seeing one of the biggest moves that it has seen in a monthly basis. And it's not a very big move. It's just a 3%. But given the fact stock has been underperforming, we're just highlighting that. Order wins have been coming for Dilip Bilkon and RVNL. So those are a couple of counters. And then Raymond, of course, deserves a big mention, given the fact a couple of brokerage initiations have happened right from Jefferies as well as Motilal Oswal. 2600 is the kind of target that these brokerages are talking about, despite the run-up that we have seen in the stock price already, given the fact they're talking about that growth and simplification is going to come by and the past concerns on debt and corporate structure have been addressed. Ashi, do you look at this one closely, Raymond and the rest of the textile quasi-realty kind of plays?
So we do not Raymond specifically, but we do kind of look at the branded apparel play space. That is a space that we do find quite appealing over the longer term. Obviously, it's a direct play on discretionary consumer demand in India. And if you look at global examples, as an economy crosses a $2,000 per capita mark, in terms of income, you start to see a big rise in discretionary spends. And branded textiles kind of fits very well within that space, right? So this could be branded textiles. You're also seeing real estate starting to do well. And real estate, you've actually had a lost decade in terms of really nothing happened in the real estate space between 2010 to 2020. So residential real estate is another space that we like quite a lot. We are a bit mindful about commercial real estate because we see work from home risk kind of playing out there. On branded apparel or other discretionary consumption names, while the growth potential is very appealing, the main problem is a lot of this is really factored into valuations. So one really does need to look at how much you're paying when you're buying into these names.
In fact, we spoke to the management of Raymond regarding their growth strategy and some of the triggers which those reports are talking about. Let's hear out the commentary a bit.
In April, we have already announced the demerger. The process has been put in place. And we are currently waiting for the various respective authorities' approval, which should happen. And we have given the timeline at that point of time, 12 months. We are absolutely on track for that 12 months. I think by April, May of next year, we should be able to list the two businesses separately. As we mentioned, that we don't have a very large capex cycle to go because the businesses are such that we are deploying more and more on a little bit on the outsourcing model. And especially where the capex will go is on account of the garmenting business by incrementing 19 lines, spending almost 200 crores. That will enable us to become the top 3 suit players in the world. Now, that is one part. The other part we talked about also on the technology investments. I think we have lacked a little bit of technology investments in the recent past. So we are going to put another 100 crores of technology investments. But on top of it, we are not seeing any large capex cycle.
Right. Nooresh, I want to talk to you about some of these lenders from the NBFC space which are gaining smartly in trade. Mass Financials is gaining about 18.5%. We also see Poonawalla, after a good correction from 450 to almost under 400, come back. Out of the two, which ones do you look good even from a long trade here on?
So Mass Financial looks interesting given the price tick today, but would wait for a dip on this one. But technically, sustaining about 950 levels would be a major breakout for the stock. That was the high for the last 1.5 years. And overall, the whole NBFC space looks pretty promising. There have been slow and steady moves across the board. So watching out for the whole space, something like a Satin Credit Care is on radar, something like Spandana Spurti, which is also seeing a lot of block deals. So these are the two names also on radar, but the whole space looks interesting. And most of them are newly listed over the last 3-5 years, which look more interesting.
That's a take coming in on some of the microfinanciers. But Ashi, what about the entire QSR space? Do you have a favorite there amongst the likes of Sapphire, Jubilant, Devyani? They're all on fire today.
So QSR, you're seeing a clear divergence in trends. So I think pizza as a category is clearly quite significantly under pressure. You've seen milk prices and cheese prices move up. So we kind of just wait out any exposures around pizzas, as in any of the stocks with large pizza exposures, the Domino's and the Pizza Hut franchises. We probably stay away from that in the near term until you don't see some kind of deflation in dairy prices. That said, the whole kind of burger franchises are clearly doing a lot better. So some kind of bets around there could work. But the main concern again here is around valuations, as in you are really factoring in a lot of the growth. And some of these franchises have really just seen growth pick up recently. We'd like to see this kind of growth sustain over a slightly longer period before being comfortable with the valuations where they are at this point.
In fact, interestingly, burgers gaining in trade, Jubilant, even Devyani, which is KFC and all of that. But Varun Beverages is not, because they usually go in tandem. If you see, you always order a bottle of Coke along with pizza or burgers.
Maybe we should check Som Distilleries and United Spirits. Have people upgraded themselves to liquor versus soft beverages?
Are you talking about mixing? It's not even Friday. It's not even Friday. She's already on mixers. Huh? All right, let's take a short break. We'll come back and...
I think I need that break, right?
I think you do. I think you do. We'll come back and take more stock ideas from our guests. Since you do a lot of studies regarding the small cap end of the market as well. Check out the small cap index and talk to us about, the fundamentalists are saying that small cap index has gone to a premium to large cap. But again, that's a fundamental talk. What are the charts telling you? Is there strength even in the small cap index even from here on?
So if you look at, yes, there has been a huge divergence in the small cap and the mid cap index with the Nifty 50, but there is a divergence of Nifty 50 even with the Nifty 500. So the thing we look back to is what happened between 2018 to 2019. In that period, Nifty went up from 10,500, 11,000 to 12,400. And that was a time we never thought that index can go up and small caps can go down. And that is the time where index went up by almost 15% to 20% over a period of time. And the broader markets fell by 25-30% mid cap indices, 40-45% on the small cap index. And during that period, we used to have this meme called Trivedi Bachega or Ritik stocks, which is where HDFC Bank, Reliance, Infosys, Kotak, ICICI, they were the ones which were doing well. Reliance was up almost 50% in that period. Now we are on the opposite end of the same cycle, which is where these names, which were major outperformers in 2018 to 2019, are lacking behind, and the small caps are doing well. So in this case, yes, the divergence is huge. There can be a correction going forward, but the only way we look at it is one should be ready for an opposite of 2018-19.
Nooresh, who are you referring to as Trivedi when you say Trivedi bachega और बाकी सब मारे जाएंगे?
So that's a Sacred Games analogy back in the day.
Yes, I remember. No, that particular graph which you just put out, where the small cap index is actually, it's like a golden cross coming from lower and outperforming the Nifty. It is a bit, making people nervous because the valuations of many of these components of small cap itself have gone way higher than their 5-year, 10-year average. And the commentary which is coming is not very bearish. They are talking about the management we get on almost an everyday basis on the channel, even from here levels giving very positive guidance. So let's see how it goes. I have a question with Asi on the new IPO which has got listed. The Pugalia IPO which got listed today, 60-70% premium to the issue price. If you may have, Ashi, you have you tracked that IPO? It's a small cap infrastructure slash kind of a EPC company, Vishnu Prakash Pugalia, or maybe the space, because the order flow coming to their side is very good, and we got the management also earlier in the day, still at 148.49. Have you seen it, that space? Have you looked at it?
So we've looked at the space for sure. I'd rather not speak too much about the specific company, but if you're looking at the space, you're really having a lot of traction around government spends on the entire infrastructure space, and you're seeing this across kind of segments, roads, ports, airports, etc. As we kind of start moving into an election kind of a season, I think you're also seeing a lot of traction now. Over the last 2 or 3 budgets, probably for the first time in the 20 plus years I've been kind of watching budgets, you've actually seen capital spends outpace kind of consumption spends of the government. So there's a very clear impetus of the government towards improving infrastructure in the country. And there clearly is a very long space to grow. So there is very clear headroom for growth. And valuations across most infra companies are still not extremely high. Now, while there is attractive growth opportunity, it's important to understand that these businesses aren't very high quality businesses on their own. They typically aren't free cash flow generating. There is a large amount of money which gets stuck in working capital. There are kind of advances that they basically guarantees that are left behind with the government post-project completions. You can have delays. So if you're looking at pure financials, ROEs, balance sheets, and cash flows, the businesses don't necessarily support very high premium multiples itself. So as long as infra growth is there, one can look at the space, but we'll be cautious about very aggressive allocations, primarily because of the inherent weakness of these business models.
Coming in on infrastructure vertical as a whole, but actually I'm curious to know, have you been following this entire deal which is brewing in the pharma space, probably the making of the second largest domestic pharma company by market cap, if at all Torrent Pharma does buy Cipla? What do you make of that?
So Torrent has just done extremely well in terms of acquisitions, as in they've got a decade plus track record of acquiring companies and actually turning them around quite well. M&A is typically a kind of space where a lot of companies end up faltering, as in you've seen attractive acquisitions take place, but then those acquisitions not faring out as well as expected. Torrent has really bucked that trend, and you've seen them multiple times actually do very well with the companies that they've acquired. So if they were to acquire Cipla, it does become a very, very valuable franchise. Really no comments about whether the deal will happen, won't happen. But if it were to happen, it definitely becomes a very large and interesting powerhouse. And within kind of pharmaceuticals, we actually see greater longer term value in terms of domestic franchises because it's a branded business, unlike in the US, where you're selling as generics and that pricing tends to get commoditized a lot faster there. Branded generics in India are closer towards consumer brands, giving you much greater longer-term pricing power. And a powerhouse such as the type you've indicated could be quite interesting, definitely.
Okay, point taken. So that's the view coming in on pharma. Definitely a tilt towards the domestic companies. But quickly, let's talk about some of the stocks which are seeing quite amount of price volume action. Starting with Karur Vysya Bank itself, it's seen a breakout from the downward sloping resistance trend line. The volumes are almost 3x the 20-day average and has hit a 1-month high on an intraday basis. So that's about Karur Vysya Bank. You also have Trident, which is doing quite well for itself. Maybe a rub-off impact of Raymond coming in. That stock has hit a 52-week high on an intraday basis. The volumes almost 2.5x of 20-day moving average, and it has been advancing for the third consecutive week. So the momentum on the positive side continues with this one. Let's move on to Jubilant FoodWorks as well. It's hit a 7-month high on an intraday basis, and look at the volumes again. Very, very heavy, almost 3x the 20-day average. Kunal, do you have any favorites from this list? Karur Vysya, Trident, Jubilant FoodWorks, and even the ancillaries and the entire verticals here.
So Jubilant Food looks interesting. I think that's a stock which has given a breakout 500 mark for Jubilant Food, the 200 DMA for the stock. The entire space, I think Jubilant Food, Devyani International, many of these stocks today are up some 8+% for themselves respectively. So that's one of the major reasons why you're seeing the volumes being consistent as well as the price action being a lot more consistent with this space. I would also be very keenly inclined towards the PSU banking stock. So I think other than Karur Vysya Bank, which you highlighted in terms of a banking name, I think many of the other PSU banking stocks like Bank of India today, I think is inching towards that 93-94 mark. Looks very strong for a potential breakout of that 100 levels for Bank of India. And so is the case with many of the other PSU banking stocks. Even Union Bank is trying to claw back again just around that 90+ mark for itself. So looks to be an attractive space. And I think this market has highlighted that you should ride on stocks which are riding on high momentum or trade on high momentum rather than betting on stocks where there is lack of momentum, because it's very difficult to try and figure out when would this time-wise consolidation end for many of these large cap stocks.
There's a market-related stock which is CDSL gaining very smartly in trade, and this market infrastructure-related stock, be it BSE Limited, which rallied almost 30-40% in a month. Today CDSL is coming back. We have seen angel broking. Today it may have corrected, but in the last 1 month almost come back to 2000 levels, which it had corrected from to 900. 50% correction got retraced. Angel 1 will come up on your screen. Asi, have you looked at some of these market infrastructure related kind of stocks as well to understand also to drive that point that the rally may be cyclical as it always, but the financialization trend which is happening in India, that is more structural actually.
No, so actually coming exactly to your point, right, that structural play is very, very interesting. We see it as a very clear trend over the coming decade. India still has, in the Indian household, still is very over-indexed in terms of the amount of savings that are going into fixed deposits, into gold and into physical real estate. While you have seen clear trends of financialization of savings over the last 5 or 7 years, you can see this across the number of demat accounts being opened, the way SIP books of mutual funds have increased. You can see it in the growth of the PMS of the AIF industry. You're still in very, very early days of this trend. If you compare kind of the percentage of savings that go into equities or financial securities of India versus any other kind of major global market, we are at a significantly low penetration. So it's not just the market ecosystem, right? So all of these market network kind of companies with the CDSLs, the BSEs, Angel Ones, etc., but even broking platforms, insurance companies, asset management companies, we see this entire space as being very interesting from a long-term value creation. That said, given the fact that they are inherently dependent on market volumes, they will come with kind of volatility over the nearer term, but over a longer term, we see a lot of value creation in this space.
Okay, so that's the take coming in on some of these financial ancillaries and how the financialization of savings is actually working out. Let me ask you, Ajay, do you know which is the third largest NBFC by market capitalization in the country?
I think it must be a PSU, if not.
Yeah,
correct?
and I was thoroughly surprised by looking at that name
Even
that
I
came out
was.
today.
I
I mean, I
was
did
like,
not imagine
seriously?
that being better than Shriram Finance and Manapurams and Muthuts of the world. Like,
Yes.
completely blew
I
me
was
away.
surprised. I was equally surprised.
You know what?
Because they don't advertise themselves. They should.
Advertise, and even you didn't imagine them probably. I mean, because
Even the
obviously in
brokerage
public,
community do not cover them very
exactly.
much.
You know, are you intrigued as well as to which that stock is? Let me go across to Somit to get the answer, because we are talking about IRFC that has seen a massive run up. Of course, the stock has seen a solid rally in the last 1 year itself, and it's the third largest NBFC by market capitalization after what, Bajaj Finance, and maybe you add Geo Financial Services to the entire vertical. Now what does the company do is basically raise funds for government to fund infrastructure and railways. And if you look at the overall shareholding and shareholding pattern, of course the government is the largest holder with 83% stake, but it's the public which owns almost 14%, and that's the third largest NBFC that we're talking about. You know what? We'll do one thing. We'll take a very short break on the show. When we come back, we'll try and get Somit back online to talk to us about this company as well.